Be moving a big chunk of my money over the next couple months, next couple years, and that is in the private equity space. Now, private equity has gotten kind of this like boogeyman or scare tactics every time you hear about private equity. They're like bankrupting your local Red Lobster. But there are some benefits to private equity as well. So we're going to talk a little bit about what private equity is, some of the benefits, and this stock that I really like that I'm putting a lot of my eggs into, and I hope to see it grow in the future. And hey, maybe it's something that you might like too. So private equity is a type of investment that involves buying and managing companies that aren't publicly listed on the stock market. Now, a lot of people, they have this common misconception that the stock market is the economy, and that is definitely not true. There's certainly a lot of huge companies on the stock market, such as your Amazons, your Apples, your Googles, your Facebooks, or Metas. But there's also a lot of companies that are not publicly traded. Think about your local fast food, family-owned Mexican restaurant, right? That is a profitable business. It makes money, and there's no way that you could invest in it through the stock market. There's also your local car wash, your local dry cleaners, that local gas station that you're picking up cigarettes from. Guys, all these are profitable businesses. Otherwise, they would not exist. And you cannot invest in them in the stock market. So that's where private equity comes in. So unlike public stocks, private equity investments usually come with high potential for returns, but there's also more risk and complexity. Your local family-owned Mexican restaurant, it probably faces intense competition in the area. It probably has very low margins. There's probably not a lot of capital with that family-owned business to begin with, so if they face any sort of difficulty, they could potentially lose the business. So that's some of the expertise about having private equity companies, is they often take on the responsibility of turning around struggling companies or helping grow smaller businesses. That's where the consulting side of private equity comes in, right? They're already used to the strategies that help businesses grow. Private equity gives a chance to invest in something in a private company that's not available for the general public. It's also much more long-term focused. Private equity firms, they typically have long-term investment horizon. That allows them to focus on building sustainable value with their portfolio of companies. It's also actively managed, and they're looking for diversification, right? Private equity can provide that diversification benefits to an investment portfolio. It offers exposure to different types of asset classes that aren't directly correlated with publicly traded stocks and bonds. Again, some of the key factors about private equity is that there's higher returns, but that usually comes with higher risk. There's also complex fee structures, so the agreements around private equity can be complicated, and you might have to deal with performance fees, management fees, and other types of charges. It's also not very liquid. As we mentioned, you usually need to keep your money invested with them for quite some time. Your capital could be tied for several years. Private equity investments are definitely less liquid than overall stocks. And this is what rich people invest in, guys. This is what wealthy individuals, particularly those with high net worth, or the ultra high net worth individuals, they frequently invest in private equity. They don't invest in Misty. They don't try to get rich by tomorrow. They know that wealth is built over the long run, and they take this alternative investing route as well. It's part of a diversified basket of tools for wealth building, right? You got real estate, you got stocks, you got your own businesses. This is a way to get in on private equity, alternative investing right here, guys. Being rich is basically like this little secret club. That's where private equity, it's gonna be giving those unique opportunities, and everybody wants to get in on the next Tesla, the next Nvidia, right? That's where a lot of these promising startups come from, is that they were once companies that got funded by private equity, and those people got some massive returns on their dollar. All right, so the company that we're gonna be focusing on today is called Apollo Global Management. Now, this is a massive alternative investment firm that was founded in 1990. Now, they went public in 2011, so even though they specialize in private equity, they are a publicly traded company, and they've grown into one of the largest asset managers globally. They actually have an AUM, or assets under management, of $751 billion. That is a lot of money. Now, Apollo primarily focuses on two types of investments. There's credit, so think about loans, bonds, etc. And then they also have equities, so think of just your ordinary company shares. Now, their clients include large institutions, so think about all those pension funds, right? All these government jobs, all these companies that are required to invest money. Those pension funds, they need to be managed by somebody. There's, of course, endowments. So this is where a lot of colleges, a lot of the alumni donate money. So that also needs to be invested. And of course, there's just the average wealthy individual. A lot of them are way too busy to do their own investing, so they hire other people to do it for them. Again, when we think about what it takes to be wealthy, a lot of wealthy people like to be on autopilot. They like to pay other people to do the work for them. Let's talk a little bit more about how Apollo actually makes money. So they're going to be making money in several different ways. They have management fees. This is when they charge a fee to manage funds. Now, this ensures that Apollo makes money regardless of how the actual investment does. This is very similar to that expense ratio that you see on an ETF. The ETF provider will make money regardless if the investment does good or bad. There's also performance fees, right? So Apollo will also earn a share of the profits when the fund does very well. They also make money from advisory and consulting fees, so they earn income by advising companies and helping manage complex investments. And of course, there's also the income from assets under management. Apollo earns this money from the capital it manages. And then we're going to talk about their big retirement segment, Athene, which is a major player in retirement planning services that focuses on fixed income strategies, annuities, and much more. Apollo also invests a lot of its own capital, which means that they're not just managing other people's money, they have their own skin in the game, making them invested in the success of their funds. Now, Apollo has actually done very well for a long time. They actually have a 39% gross internal rate of return, or IRR, and they have a 24% net IRR on an annualized basis since the company's founding in 1990, which is absolutely insane. Apollo is the #1 alternative credit business. They are the #1 investment grade alternative credit business, and they are the #1 company by annuity sales for retirement. What an excellent company here, guys. And you can see they're doing a very good job of screening who they do business with, because they have just a 0.1% average annualized default rate. This means people are paying them back on time. They're rapidly growing. We can see they had $152 billion that were flowing into their funds in 2024. That is amazing. And they were super busy. Nearly $250 billion in total originations, which is insane, guys. Absolutely growing on all fronts here. When we look at their winning culture here, guys, you can see here they have 3,500 different global investment relationships across the world. This is why it's so cool to be able to just put our money into a company like this, because they already have all the partnerships, all the relationships that's something ordinary people like us could never dream about. 3,500 different business partners across the world. And by being an investor in Apollo, that means you too are also a piece of that pie. You are a part owner in that diverse portfolio. And there's also just a lot of market opportunities here, guys. In the future, there's going to be so many people in retirement. We'll talk about that here in a little bit. But $45 trillion total addressable market, individuals $150 trillion. And I didn't even know there was that much money in existence, but according to this slide, there is. And this is something that they're really focusing on for the future. They really think there's a lot of potential in energy transition. I mean, everybody's so worried about the global warming. Can't have that, right? So we got to do energy transitions. Our failing infrastructure these days, a lot of power and utilities. These are high maintenance, high costs. Our power grid has to constantly be reshuffled. And of course, a lot of digital infrastructure. There's going to be a lot of technological changes here in the coming decades with AI, robots taking over all of our jobs. So $15 to $20 trillion there. Apollo will get a piece of that pie. And this is what I was talking about earlier, guys. $45 trillion in the global retirement market. by 2030, there will be over 1 billion people worldwide that are in retirement. This will be people that need to stretch their dollars. They need to put their money somewhere so that it is working for them. That's assuming that they have money for retirement, which is totally another problem for another video. But 1 billion people, there's only like 8 billion people on the planet. So for 1 billion of them to not be contributing to society in terms of working, that might come with a lot of problems. But for now, we're focused on building their retirement so that they have enough money in retirement to spend. Like we talked about, guys, this is what rich people invest in. This is what the ultra wealthy people, if you look at statistics of where they put their money, a lot of it is in private equity. All right, guys, let's talk a little bit more about how APO or Apollo Global Management has done in the past. So they're actually on a little bit of a dip here. They've been hurt pretty bad to start off the year. In the last month, they're down 15%. Last 3 months, they're down 21%. Year to date, they're down 16%. But they've had a rapid growth here in the last couple of years. In the last year, they're up 25%. That's with their most recent downturn. Last 3 years, they're up 121%. And last 5 years, they're up 285%. That is very impressive. And they could be on a little bit of a dip here, guys. Analyst rating is 183. That's a lot of upside from today's prices. Most analysts have this company as a buy. Market cap of $80 billion. Still definitely a lot of potential room for growth here. And of course, I know a lot of you care about that dividend yield. And it's pretty nice that we actually get a dividend from a private equity company. Not all of them give them these days, but they have about a 1.38% yield, which I know is going to turn off a lot of people. But if you can get your mind off dividends for 1 second. Dividends are definitely important, but there are other things more important than dividends, such as growth. This is dating back all the way to 2015. We can see some steady dividends coming along the way. 46 cents a share for their latest dividend. Just a really low payout ratio of 25%. So this might be a good fit for dividend lovers. It does pay a dividend, but remember, this is alternative investing. It allows for diversification from traditional stocks and bonds. Private equity, it definitely comes with a lot of layers of complexity. There's lots of agreements, fee structures, and your capital. It could be tied up for a while, but that's where it's nice to have some publicly traded companies like Apollo. And there's other companies out there, right, like Franklin, KKR, the Carlyle Group, Blackstone, even BlackRock, really, Ares Capital, BDC. These are companies that could give some of that private equity exposure. Again, this is where I'm going to be putting a lot of my money for the future because I see a lot of potential here, a lot of ways to make money. I look at what the rich are doing and I find ways to emulate them, find ways to be better than them, guys, and that's to diversify my portfolio. This is our way to get into that rich secret club. This is our way to get access to those best deals. This is a way to take advantage of Apollo's economies of scale. This is a way to join in on some of that. All right, guys, let me know what you think about Apollo private equity in the comments below. Am I being too bullish? Of course, the conversation doesn't have to stop here. It can continue in our Discord where we have so many smart people in there having some great conversations. Remember, you can see my full $220,000 plus portfolio and the Patreon link below. My videos are always found in podcast form under the Collect Cash podcast name, and I will catch you on the next one.
Cash flow, baby. Just cash flow. Collecting money. Cha-ching, cha-ching.